Hi guys, Jake here with the Trading Table, and today I want to talk about the secrets of long-term investing. So there are three things you really need to know about long-term investing that I think these are the three most important things as to why people should always have long-term positions. Even if you're a day trader, you should have long-term positions. So the number one thing I would say is that you can always average down, and since it's shares of stock and it's not options contracts, they don't expire. So, for example, if you just buy shares here, buy shares here, buy shares here, buy shares here, you can always just average in and scale into your positions. And eventually, over time, you can build up a pretty substantial position in a company that you believe in. The second big thing that I wanted to point out that is a huge advantage for long-term investors is very low capital gains tax rates and very low commission fees. So capital gains gets taxed less and less the longer you hold the stocks. That's why people like Warren Buffett recommend that you hold stocks for as long as possible, because after the first year, it depends on your income. But if you make less than $30,000 a year and you hold a stock for more than a year, you don't get taxed on your gains. So it's just things like that. And even up from there, it only goes up to 5%, 10% when you hold it for more than a year or more than 5 years, depending on which tax bracket you're in. So you can do more research on that. I would highly recommend it. But that's another huge advantage is the are just outrageously low. And the third thing is you're going to be right 99% of the time because you really can't go wrong long-term investing because like I said, you can always average down, average down, average down. And even if we're in a recession, eventually it's going to go back up. Like one of my big long-term positions right now is Tesla. And at this time, Tesla is just bounced off its low at 176. And I've been buying Tesla positions all the way down. And I bought my first shares, I'll say it here, at 315. And, right now, not looking like a super hot decision, but I have faith that at some point Tesla's going to come back up into the 350 or 400 range. So I'm lowering my average cost per share down to 240s and 230s. So you're going to be right like 99% of the time, especially if you're buying into blue chip companies, which are companies that essentially like move with the market, move the market. Just companies that aren't going to go out of business. It's just not going to happen. Like Apple, Microsoft, Facebook, they're just not going to go out of business. It's just not going to happen. So you can never go wrong buying those companies in a recession or just buying them because you're going to be right 99% of the time. They're going to go up over time. So that's going to be it for this video, guys. If you like the video, please like and subscribe, and we will catch you next time on the trading table.